Anne Kritzmire, it's not easy finding yield in this market, so why are closed-end funds a good place to look?
Well, number one, most closed-end funds are designed for yield and income. We at Nuveen, all of ours, we've got over 100 funds. They're absolutely all designed for regular income, dividends, and cash flow. So that would be number one. Number two, closed-end funds, by nature of their strategy, the actual closed nature, means you can invest in a pretty wide variety, even more than your normal open-end fund, and that gives more opportunities for yield too.
Muni closed-end funds had a great 2014. Can they do it again in 2015?
Well, we'd like to think so. Our municipal people are pretty constructive on municipals based on the relative value to treasuries. Certainly in the closed-end space, most of them are leveraged, and we still have a really nice spread between borrowing rates and investing rates. So we're looking for at least some good news this year.
Will leverage undo closed-end funds if and when, sooner or later they gotta, rates rise?
Rates rise, you got to ask, well, which rates, right? So long rates on a muni bond portfolio, for instance, that's going to impact the NAV. The bonds are going to fall in value. What actually happens to the yield or cash flow? Anybody's guess on that one. Ultimately, the Titanic moves. Leverage, of course, if the short rates rise and the curve flattens, that will mitigate, that'll minimize, or not minimize, that'll reduce the effect of leverage. If there's some spread, you'll still get some additional constructive return out of leverage, but not as much as we do today.
Is there a good time to buy closed-end funds, maybe when the discount gets extended?
When the market's open.
And actually, and on the other side, should you sell it if the premium gets extended?
I should say, well, a good time to buy is when the market's open, right? But no. Honestly, if you're a short-term investor, discounts matter more than if you're a long-term investor. Over the long term, it's the distributions. It's the yield. That's where more your return's going to come versus any sort of discount narrowing. That said, it does pay attention. If you can buy something cheaper and it's high quality, pay attention. Look at where is the 52-week high low and where are you now?
And then finally, of course, you may be biased, but why are CEFs, closed-end funds, better than ETFs, exchange-traded funds?
Well, you know, Nuveen, we've got a lot, and we're the market leader, so we like that a lot. But I think it's an and, it's not an or. ETFs generally passively managed, cheap, easy to understand. They still trade throughout the day. They both trade throughout the day. Closed-end funds, active, give you the yield, the cash flow, and a pretty wide variety of strategies from which to do, so you can diversify your client's portfolio.
All right, thanks a lot for coming on.
Thank you very much. My pleasure.
Thank you for watching The Street.